We indeed have some signals of a housing market turning slower. While we go from super hot to merely hot, it's fascinating to watch which of the Altos Research metrics are showing the earliest signals in the transition. Every week, Altos tracks every home for sale in the country. We analyze all the pricing and all the supply and demand and the changes in that data, and we make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the CEO of Altos Research. And let's look at the details for the week of April 25th, 2022. Home prices are unchanged this week. The median price of single-family homes in the U.S. this week remains at $420,000. That's actually the first pause in weekly home price increases since January. This single week of flat price appreciation it's not a trend, but it's going to be interesting to see when we do hit this summer's plateau. You can see in 2019 on the dark red line here in late April, home prices hit $331,995. And there were a few more weeks of price climbs before the plateau started in mid-May. In April 2020, we were still in that little dip of the initial pandemic, but the upturn was already underway with price gains for 2020 kept going well into late summer and even in the fall of that year. So because we have normally a few more weeks before we hit a summer plateau, I expect that we'll have a few percent more of home price increase this year, just because of the seasonality. But it will be very notable if we've already hit our price peak for the year. This is just 1 week of flat pricing, so it's not a trend yet. By the way, the reason that home prices peak in May is because normally the best inventory gets and the greatest demand happens in the spring in preparation for the summer. In a normal market, the house gets listed now. It takes 4 to 6 weeks to go into contract. Now school's out and then we move. But if you list in July, you risk facing that deadline on the other side of summer. So home prices, they do a little discount to make sure they move on time later in the summer. And that's why, we can expect now, I still expect now a few more weeks of rising prices, even as mortgage rates are rising. It's still the optimal time of year to transact. So prices are flat this week. And if they're flat or down in the next week, that will be notable. But I think they're going to tick up. So we'll see next week. The price of the new listings stepped down this week to $407,600. That's the light red line here. That's off last week's super high peak. And right in line with this is exactly what you'd expect for this time of the year for new listings. So the light red line here will bounce around this level for the next month or so. If it starts falling more quickly, that'll be notable as a leading indicator, an early indicator that rising rates have cooled buyer demand. Inventory is up almost 2% this week to 275,000 single-family homes unsold on the market. Last year at this time, inventory was 310K, but hadn't yet started climbing for the spring. So we're climbing now. So each week now we're closing the gap with last year. We expect by early July we'll be posting year-over-year inventory gains. So 2022 will be higher than 21. That'll start happening in early July. This year-over-year and week-over-week language I use can be a little bit confusing. But so inventory is climbing each week, but still below last year. I shared some data on Twitter this week that some markets, for example, California, are rising each week. And California, for example, just hit is a bit higher than last year. So rising each week and is already higher than last year. So California probably leading the country by a couple months in that sense. Nationally, though, inventory is still below last year. In 2019, as I've been trying to call your attention in these charts, inventory had risen 8% over the previous year. April of 2019, we were still feeling the effects of the prior year's rising mortgage rates. So at that time, there were 867,000 single-family homes active, unsold on the market. And since right now there's only 275,000, that old normal level feels a long way off, even if inventory climbs later this year. But here's maybe the headline for the week. The days on market actually ticked up this week. This was surprising to me. Normally with the spring market, new homes are getting listed and buyers are ready to go, and the median time they sit on the market decreases usually until June. Then in the second half of the summer, things start slowing and climbs. You can see this low point in the chart here each year is about that June timeframe. But now this week, nationally, we had an uptick in market time to 28 days. So normally time is decreasing right now, but this week up. That seems significant, especially since we know that there's still a ton of the immediate sales happening. So market time overall is climbing, but there's still a ton moving immediately. And so what happens is if just a few, maybe they're overpriced properties, they start to feel expensive with the new mortgage rates, those sit and overall market time starts to climb. So that seems important. We're going to keep our eyes on this stat each week. Surprised me to see that happen already. Okay, so market time is inching up. But if you're an agent with a good listing, quality property, you know that you're still in the bidding wars and the homes are moving as fast as they get listed. So both of these things are true. This is one of those times where if you're doing 90 on the highway and you take your foot off the gas, you're slowing, but you're still doing almost 90. So both states can be true. And this is the immediate sales. So 28,000 of the new listings took their offers and went into contract essentially immediately this week. That's still 30% of all the new listings, over 30% of all the new listings. There's still plenty of bidding wars. What this tells us is that in the early stages of a market shift, the edges of the market slow first. The peak demand parts of the market still have intense demand. And finally this week, this is a 5-year look at the Altos Research Market Action Index. This is a metric that we use at Altos, which gives you an at-a-glance answer to how's the market? Is it slowing? Is it hot? How's the market? It uses relative levels of supply versus demand. Measuring demand is particularly tricky in real estate when we're in this supply-constrained space. So you can't just look at the sales rates and say, well, 100,000 people bought homes, so demand is 100,000. Because we bought everything available and demand was more than 100,000. So the market action index takes into account other demand indicators, like I cite price reductions, for example. And so what you end up is with a speedometer on this scale. 30 is what we call balanced. And in the Altos reports, if you pull up an Altos report, you'll see the speedometer. You'll see that chart right away. If you want to know how's the market in any zip code in the country, you pull up the Altos report and you look at the market action index. You can see where it is right now and where it was last month. Right now, nationally, no surprise, we're in a strong seller's market still. Inventory is crazy tight. Demand is still super high. In this chart, you can see the light red line here are the weekly readings, and they bounce around a little bit. And how high things have risen in the past couple of years. Inventory been so tight, demand so high. The market action index has been riding super, super high. The dark red line here is a smooth, it's a rolling average, so you can see the trend more easily. At the right end of this chart, in the weekly readings, the light red line, you see it has started ticking down. The weekly readings have started ticking down. Last year, at this time, we were still climbing to the peak. So what this tells us is that, like the days on market, these are the first signals of demand starting to ease relative to supply. Everything is still super nuts, but we've rolled over the top. What's not yet clear in the data is how far things adjust down. Is it only a slight easing, or back to a merely hot market? Is it more abrupt? Is it more deep? Those are data that we have to keep watching for. As of right now, we can see we're just past the peak. Okay, that's all the data we have time for this week. We are starting to see the market slow in a couple of the key early indicators. So stay tuned here each week to keep your eye on these indicators with us. As always, stay tuned to the Altos Research YouTube channel to get the videos. We have a great podcast top of mind this week available with Tom Ferry, the extraordinary coach. Tom and I had a great conversation about talking to buyers and sellers right now about this market. Tom has a great comment in there about what if this market is actually a buyer's opportunity rather than, we've been calling it a seller's opportunity for a long time. Check that out to see Tom's logic for that discussion. So go to altosresearch.com, get all the data, connect with our team. Okay, that's all we have time for this week. More next week.